Hello, traders. It's Tuesday, May 27, 2014, 8:01 a.m. Chicago time. Hope you had a good long weekend. Uh, if you recognize Memorial Day, definitely had some amazing weather here in Chicago. Feel rested and ready to go. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Let's start with a look at what has happened. Overnight, UK April BBA mortgages missed by they came in at 42.2 versus 45.1. BOE's Bean sees an argument for moving only gradually when hiking rates in the UK, but thinks that this strategy requires the Bank of England to start earlier. Military strikes in Ukraine against separatists continue over the weekend. Russia continues to call for a stop of military operations against its own people. In the Ukraine, the little drop in gold and silver is credited to the election of Poroshenko as president of the Ukraine, and this has caused a positive sentiment across European products and negative for the metals. ECB's Draghi spoke yesterday. He's not resigned to allow too low inflation for too long. Must watch for risks CPI not moving back to 2% and be ready to act if inflation expectations falling. A more preemptive approach may be needed. Same stance as he's had since the last ECB meeting. Remember, June's ECB meetings when action is supposed to be taken or is expected to be taken by the ECB. U.S. durable goods came out at 0.8% versus negative 0.7%, so it blew that number out. We had a little pop in the S&P on that. Hopefully it's not a sign of things to come today. It moved, I think, 3 ticks higher on that number. Looking at today, we have ECB's Draghi's having an armchair discussion, is what the calendar says. That's supposed to happen at 8:30, right at the cash open. At 8:45, market U.S. PMI services expected. This is a prelim number, expected at 54.4. At 9 Central, consumer confidence at 83. Richmond Fed at 5. And then at 9:30, Dallas Fed's expected at 9.2. 2 p.m. Central, BOE's Carney's expected to speak, and then 10:30, 3-month bills for 25 billion, 6-month bills for 23 billion, and then at noon Central, 2-year notes for 31 billion for those who trade treasuries. Since this is the first day of the week, let's look ahead and see what could present headline risk. The calendar does have a fair number of things on it, but nothing too dramatic. Tomorrow, German unemployment comes out overnight. European money supply M3, European consumer confidence. Thursday's Ascension Day, holiday in Europe. I believe Scandinavia and the Scandinavian and Swiss markets are shut. Others, even though it's a holiday, they continue to be open as far as I can tell. Thursday, we have U.S. initial claims, U.S. GDP, U.S. pending home sales, natty gas, and crude oil. Friday, U.S. PCE core, U.S. personal income and spending. Chicago PMI, which is a high importance number. University of Michigan confidence is a final number, not a huge deal. And then we have Fed speakers Lacker, Plosser, and Williams on Friday. And I also want to remind you that Friday is the last day of the month, so we have end-of-month trading on the close Friday, so be careful there. Let's switch gears and look at the technicals, look at the charts. So as you can see on this chart here, it does not represent the trading that occurred yesterday, which was a new high a year. With the S&Ps pushing through 1900 and holding. I scrub holidays off this chart if I don't want to have holiday trading on the chart. If you want to do that, all you have to do is right-click. If you have IRT or Market Delta charts, just right-click anywhere in a blank space, hit Scrub Data and Holidays, and it'll get rid of the holiday trading. If we look at what we did on Friday, here we are. This is Friday here. This is Thursday. Friday basically opened right at the point of control of Thursday. Chop sideways, open auction in range. The expectation for Friday was an open auction in range. The primary hypothesis for Friday was expecting a very choppy open with limited higher time frame activity, as most financial institutions will likely square up positions for the long weekend and anticipate an exodus out of the market quickly. This is what I had talked about on Friday's Trader Bite, and also this is what I posted on Twitter as far as my notes for Friday. Likely to stay in yesterday's range with 93.5 to 87 as a likely range. That was incorrect. We went to 93.25 early, but we were not able to find any sellers at all. I expected it to test down to this key LVN down here, and it just had no sellers at all, and it was allowed to basically float up for much of the day on Friday, putting in new highs. Okay. Before buyers step in to slowly take it through to new highs, a high of year at 99.25, with very little trading occurring at the IB range, signaling significant strength and likely continuation. So if we look at how this was created, we see that there was a little bit of volume, not much at all down here. And then as it shifts up and breaks the high of Thursday, and then as it breaks the high of the prior high of year, there's significant volume up here. This is very odd. You'd expect volume to taper, especially later in the session on a holiday weekend, but we left behind a very deep ledge here. Big drop between 95.50 and below. So the IB high was heavily traded with a tremendous amount of volume relatively occurring above the IB. The overall volume on Friday is the lowest in a long time, 641,000 contracts traded on the day session, according to my tick data. But all of it happening above the IB, showing acceptance. I mean, this is a clear sign of acceptance and probable continuation, which is what we got overnight. P-shaped short covering profile with heavy volume down to 95.50, leaving a ledge there. VPOC shift up, so we have the point of control moving up again, with price moving and moving value higher out of prior day's range. So value above the prior day's value range, an entire range. Also bullish. Holiday trading pushed ES above 1900 figure and held prices higher into current overnight session. Price action showing higher high, higher low. Bull trend in the short, intermediate, and long-term time frame. Okay, not good for those who were short. Not sure about the new shorts coming in today, but let's quickly look at the overnight before we discuss the hypothesis for today. The overnight session, very boxy profile, not very much to glean from it. Boxy profile, double top at 1906, showing a weak high. This high is very weak looking. There's a gap below to 99.25 that was left behind from Friday, and very low volume overnight due to the U.S. and UK holidays yesterday. We're at 92,600 contracts for the session, and this is partially cut off. This is partially cut off at midnight, so it does not count what happened in the Tokyo session. However, I really don't expect that to add that much more. So I would say volume is about half of where it normally is for the overnight session. Very little participation overnight. Okay. The primary hypothesis for today, we're opening above the prior high of year. So we have a gap of approximately, from the closing price, we have a gap of approximately 7 points right now. The expectation is for an initial responsive selling. I expect those who are holding longs above 1900 are likely to clear those trades and square up a little bit, especially coming into the end of month. So I expect a responsive selling spree on the open, potential for an OTD open test drive down or an open drive down is heightened for today. Looking for an initial test of 99.25. We do have a weak high, so you know, depends where we are at 8:30. It's 8:12 Central right now. It just depends where we are at the time, but we do have a weak high, and I expect it to get tested or poked at least by a tick. If we do only take it out by a tick and have another failed auction, which we've had many of lately, the drive down could be pretty strong. So that's my primary hypothesis, is for the market to seek down and look to fill this gap and test to form a base. If it's going to continue higher, it'll likely have a better structural foundation if the gap is closed and it tests for sellers early. We'll see how that works, but that's what I'm expecting. Secondary, I expect that it would try to close the gap, chop around, and then find buyers to push through 1906. I'm hoping that that would not be the scenario, although as a trader I really don't attach myself to any of my hypotheses or any particular bias. I really don't care which way the market goes, but I'm going to tell you that trading a rallying, grinding market like this is really no fun. There are fewer opportunities, in my opinion, and volatility just falls off a cliff. Here's the VIX. If you look at the VIX over the last, let's see how far this goes back, to July 2010, the VIX has dropped off, and it's just been sitting sideways here, holding this kind of weird slow triangle. But it has broken on the downside with this up move on Friday, and that's just not a good thing for traders. It's you know, a slow, compressed, tight range, low volume grind up is just not fun. So I hope we get some sort of spring cleaning on the ES, some sort of a cleanse. But as you all know, I really don't base my bets in the market on that. I'm just not. I'm going to be upfront to say that I'm just not a good uptrend, one direction trader. Just that's not my cup of tea. So I'm going to look to the options market to play it, to play that directional on a longer time horizon, but not very much. I'm a day trader, not an investor in the futures market. So those are the two key hypotheses. I'll leave you with those. Additional headline risk for today, I don't see any. It looks like it'll likely be a pretty quiet session. For closing remarks, I'm reading this book on a recommendation of one of our traders here at Stage 5 Trading, and it's called Spark. And it's incredibly interesting, and it brings up a point that I used to press a lot with my prop traders, and that is making sure not only are you should you meditate or do something that is calming in nature, spiritual in nature, so to speak. In my opinion, that is a strong contribution to your overall well-being and performance in trading, in my opinion. But this book is written about how the mind handles stress and the role of just exercising and what that does physiologically. So it goes through a lot of studies, and it maybe may not be you know, a John Grisham thriller or whatever, but it's so important to know how we work, how our mind operates, and the benefits of just getting out there and moving. So I hope you can make a commitment. It's Tuesday for us here in the U.S., and I think in the U.K. it's the first day of the week. I strongly suggest you make a commitment to yourself, a goal for yourself, in addition to your trading goals, modest trading goals for the week, like we talked about last week, reducing the number of errors in execution. Remember, an error in execution does not mean you got long and the market fell and you got stopped. That is not an error. That's just a trade. An error in execution is one where you plan something out, you put the trade on or you don't, and you don't execute it in the market the way you said you would when you had a calm mind in your planning phase. So that's an important goal to have. But I really strongly suggest that you try this. Get up 20 minutes early. 20 minutes early, that's it. 20 minutes, get up, throw on some shoes, and just go for a brisk walk for 15 minutes first thing in the morning if you can. You will be shocked at what that does to your mind and how that prepares you for the day. Our ability to deal with stress is highly complex, but the short version of what the book is talking about is that movement gives your mind the chemicals it needs to come back into focus and to handle stress appropriately. So having anxiety and just thinking about your anxious problems, fears in trading, fears in failing in trading, or whatever that anxiety, without the movement is counter to the way we are designed. When we are anxious or feel stress, the body is looking for movement. It's looking for fight or flight. It's looking for some muscle action to happen. If you don't have that energy that the brain is so amazing at generating, that energy goes back into your body and causes all kinds of damage. It's like having radioactive material in your pocket. So it's best to dispense with it. I strongly, strongly, strongly suggest just make a commitment to yourself for until Friday to just get out these next 3 days, or if you include this afternoon, 4 days, and just go for a 15-minute brisk walk. You don't have to pound the pavement and kill your joints. You don't have to lift heavy weights or anything. Just something as simple as taking a walk that is deliberate, not strolling, but walking fast for 15 minutes. See how that works. Good luck.